Welcome back. You're watching Power Lunch. Let's turn our attention now towards how deal making was as far as 2013 is concerned. The year was sort of a lackluster year as far as large M&A deals are concerned, whether inbound or outbound, but still there were some bright spots here and there. But as we approach the end of the year and as we go into the new year, with the economy picking up, even though on a slower pace, do we see M&A activity picking up speed? 11th month M&A tally in 2013 stands at just about $26.5 billion, a decline of about 21% over 2012 in value terms. But is it set to change? Let's get that question to Harish HV, partner, India leadership team at Grant Thornton, joining us right now from Bangalore. Harish, great having you with us. 2013 wasn't that great a year, but then the economy didn't do well. Corporate earnings didn't pick up substantially. And overall, the sentiment from India Inc. has been fairly gloomy. Is that set to change in 2014 as we go into the new year and as recovery starts to pick up? Do you see that changing? Do you see M&A activity, deal making picking up?
Well, I think let's quickly run through what happened in 2013. You're right, it was a little bit of lackluster period with average number of deals remaining stable at below 1,000, which is the number we're seeing for the last 3 years. We've seen some uptick in outbound in terms of average value of deals, but we haven't seen multi-billion-dollar deals on the outbound side. I think the big surprise to all of us in 2013 is the substantial growth in private equity activity, which jumped from about $7 billion to $10 billion in spite of all the headaches of promoter conflicts, rupee depreciation, and challenges of exit. So that's a good sign for the India Inc. Now, if you look at 2014, yes, I am quite hopeful that things will change for the better, but that depends significantly on whether we will see recovery or not. But I think we have reached at least a stability. I think when we started looking at this 10 years ago, we used to see maybe 100 deals a year. But in the last few years, that number has significantly improved. And we are now, on an average, doing, regardless of economic conditions, about 1,000 deals, which is a big jump. So M&A is here to stay, but we need to see substantial growth in that activity. And I'm hopeful that 2014 will see some good growth in that.
Right. Harish, what could be the probable cause behind the PE activity going up so sharply? Was it because of the fact that assets were available at distressed valuations? Was that the reason?
Well, I wouldn't say distressed valuation, but if you are a company which is looking to raise capital with a debt capital market in the form of IPOs, not much interest in international capital raising, where do you go but to the private equity? And from a private equity perspective, I think they are looking at a long term, much longer than the stock market. And they probably see good potential for India Inc. Over the next 5-7 years. Plus, they have learned all the pitfalls of investing in India, and they are taking care to address those pitfalls. And finally, I think there is some reasonableness in the valuation expectations from India Inc. also. I would say all these factors put together would explain the growth in private equity in 2013.
Right. But can you give us a breakup? Which sectors saw most amount of private equity activity in 2013 and going forward? Which sectors do you think would see a greater activity going forward? Also, add a bit of color on how are private equity investors looking at absolute returns in an economy like this? Are private equity investors looking for higher returns when it comes to any kind of asset they go after?
Yeah, let me address the questions. I think last year, 20% of the money went into the technology sector, 13% into telecom, about 11% into pharma healthcare, and financial services saw another 11%. So these are the top 3-4 sectors which have been traditional hunting grounds for private equity. They are investing, for example, significantly in the e-commerce space. So that's about where private equity is investing. I think the same trend would continue. I don't see any significant interest of private equity in manufacturing at this stage, and other sectors will sort of hang back. In terms of returns, I think, yes, the return expectations are bound to be high, given the problems of the Indian economy, the way the rupee is going. So I think private equity returns are expected to be quite high. And quite a few people have achieved those returns in the past, and hopefully some of them would do in the future too.
Right. Harish, 2007-8, we saw pretty large outbound M&A deals happening, some of which have actually yielded decent results for companies. I mean, take a look at what Tata Motors did with JLR acquisition. They turned around it and it's done fabulously well for them. When it comes to large outbound M&As, what's the thought as far as India Inc. is concerned? Are they all about conserving cash as of now and letting the economy improve and only then coming out and taking a look at assets abroad? Or do you think there aren't much opportunities to invest? Maybe that's the reason why we don't see much of outbound M&A this time.
Well, outbound M&A, if you look at the average deal size has gone up, but numbers and value has remained pretty stable. What drove the M&As in 2008 was also a huge amount of liquidity available in the international markets, particularly in the debt market. Today that is missing, and that becomes a significantly negative for companies to look at large deals. I think we are seeing the challenges that Apollo is facing with Cooper. So it's quite difficult in today's world to put together a large deal with significant debt financing. So that, I think, becomes a hindrance. Having said that, I think India Inc. Clearly is looking for increasing outbound, and they are looking at targets which are within their means of raising capital, rather than the highly leveraged deals like the ones we saw in 2007, 2008.
And what about inbound M&As? I mean, global pharma has been fairly bullish about the Indian pharma companies. We have seen a couple of them. Mylan Strides was one, a significant one, actually created a lot of value for shareholders. Are there enough opportunities on the inbound front? And if yes, which sectors would you say have these opportunities? Is it going to be all about pharma once again? Would global pharma continue betting on Indian pharma companies?
Yeah, I think inbound we have seen significant weakness, and the big deals are really, for example, the Hindustan Lever increasing its stake in, Unilever increasing its stake in Hindustan Lever, Diageo taking a deal, or the Mylan deal with Strides. So those are the big deals. But if you look at overall numbers, it has shown a dip because I think there are challenges that multinationals are facing. And several of them look at the headlines of the tax issues that India Inc. is facing, and I think they are being a little reticent about it. But going forward, yes, I think consumer and pharma is where I would expect significant activity in the form of inbound next year.
Exactly, and that was going to be my next question. I mean, take a look at what GSK Consumer, GSK Pharma did. They are looking to hike stake in their Indian arm. GSK Consumer has done it. GSK Pharma is doing it now. And there are a whole lot of other MNC companies which are sectorally very diverse, belong to various sectors. Do you think going forward there's going to be a lot of interest from these global MNCs to increase the stake in their local arms, in their India arms? And if yes, if you can share some data as well.
Well, I don't have specific data other than the ones you mentioned, but yes, I think there is significant interest, and that is driven by the fact that large multinationals today have significant cash on their books, and this could be one way of deploying it and increasing their stake in the India business. It would also reduce the issues of dealing with shareholders. I think once the new company law, all the details are out, and if delisting is an easy possibility, I would say most of these companies would look to delist, and then we would see a flood of such issues. Otherwise, they are limited by the gap between their holding and 75, whatever is possible for them to mop up.
All right, Harish, thank you so much for joining us. Great getting those thoughts from you. And of course, is wishing you and everybody at Grant Thornton a happy and prosperous 2014 from all of us here at NDTV Profit. Focusing on the markets for a brief moment, Nifty Sensex not doing absolutely anything.